First idea, Canadian Apartment Properties REIT.
Yes, Andy, this is a recent addition to the portfolios. We added it a couple months ago, and we're buying it here, obviously. And we like the long-term fundamentals of the apartment industry, especially in Canada, and that's what their focus is in terms of strong underlying demand. We know the Canadian government is targeting high immigration levels over the next 3 years. They want to, bring in like 450,000 immigrants per year for the next 3 years. So strong demand when people come in here. They need to find a place to live, so that is good for Cap REIT. Now, in the near term, they are facing some near-term headwinds in terms of they are experiencing higher operating costs and utility costs, which is not sufficient to maybe offset what they can increase in rents. Because as you know, Andy, in Ontario, there is rent control. They are allowed to increase rent by a certain amount. I think it's 1.2% this year, but next year it's going up to 2.5%. And so for now, in the near term, that's not really sufficient to compensate for the increased costs they're experiencing. So their margins are a bit soft. We think that over time that will subside. The cost pressures should subside. And in terms of, all real estate stocks with the increase in interest rates, REITs have been impacted, and we do think interest rates eventually will moderate and come back down. If you look at the yield curve, the bond market is telling us that. So we like the stocks down over 30%. From its highs back to pandemic levels, when in the midst of the pandemic, and providing you a distribution yield of 3.5%, which we think is very safe.
Raytheon Technologies, it's come up as a favorite lately from quite a few guests. Okay. Unfortunately, we're going to see more arms spending. Yeah, we are, and it's half defense and half commercial. We've owned this name for a while. We owned the predecessor company, United Technologies. So in April of 2020, United Technologies spun off Otis and Carrier, and then merged with Raytheon, which is the defense side, and then they became Raytheon Technologies. So now the company's about half defense, half commercial. Commercial has been very strong. The aftermarket for commercial, coming out of the pandemic, people started flying. So when planes fly, they need to be serviced because they make aircraft engines, avionics, interiors, and so those engines have to be serviced when you fly a certain number of miles. So that's been very beneficial on the commercial side, and that's what has driven the earnings improvement. But in terms on the defense side, you're right. Defense spending has, spending budgets has improved, especially since the Ukraine war. Yep. But in terms of production, they actually have been having issues in terms of getting supplies and labor on the defense side. So I think you still have leverage going forward for the defense side to kick in. Those problems will get resolved. They were able to deal with the labor shortages and supplies much better on the commercial side. But according to management, procurement rules on the defense side is much more restrictive. You can't hold that much inventory, whereas on the commercial side, they could actually ask their suppliers to hold more, and they have preferential treatment. So we like the balance. We think defense spending, as you're right, that with the political uncertainty, it's going to continue to grow. And they do have a very strong backlog of orders on the defense side. And we still, on the commercial side, have air travel, especially international, as China opens up. That's still incremental. And then as the OEMs start to build new planes, that's also positive for Raytheon. And so what do they do on the aviation side? They build the engines or service them? Yeah, Pratt & Whitney. They own Pratt. They build the engines. And then when you build the engine, it gets installed into the plane. And then they have the aftermarket servicing as well, which is very lucrative. Servicing things. Servicing, no, any householder knows about that. Yes. Yeah. Finally, WSP Global, the big engineering company. You like the look of them. Yes, we've owned this for a couple of years now. So it's pure consulting and design, no construction, which we know is where a lot of engineering companies get into difficulty. This company has, it goes through acquisition as well as through organic growth, has really grown their earth and environmental vertical, sees a lot of good growth there. In their last quarter, they're seeing very good growth across all their verticals, and they're very global. Canada is less than 20% of their earnings. So, they've done, as I said before, they do acquisitions. They've been very successful at buying them at reasonable prices and integrating them in. They actually walked away from when they had announced a couple months ago because there was a competing bid that came in, and management thought that what they had offered was fair. So they actually decided to walk away from that deal. So that kind of shows you their financial discipline. They have done some fundraising. They had issued some equity, I think back in August,
to pre-fund this potential acquisition. So their balance sheet is quite strong. They continue to look for opportunities. And I think, if we get to an environment where the economy is a bit more uncertain, that attractive opportunities should present themselves. But so far, they say that they have not really seen anything impact their business in that way. They grew organically, I think, 8% last quarter, even higher if you factor in their acquisitions. And they feel that they can probably continue to grow. Their stated range is 6 to 8% organically on the top line and improve their margins over time.
It's interesting. I mean, it's basically a brain power company.
It is. It's the people that you're buying. So it's really important that typically when they know these companies, they've been talking to them for a long time.
Probably working with them.
And you have to have a very good culture because you want the people to stay. And I think they've been very successful at doing that.